You can retire on Social Security, Chapter 5. Julie's real-world Social Security statement. Let me introduce you to Julie. Julie is 60 years old and actually a client of mine who gave me permission to use her information. Obviously, Julie is not her real name. The very first page of her most recent Social Security statement in large font proclaims she'll make $1,916 a month at full retirement age. The next page gives us her benefit estimates. It says this most important statement. At your current earnings rate, if you continue working until your FRA, your payment will be about $1,916 a month. At 70, your payment will be about $2,513 a month. At 62, your payment will be about $1,282 a month. Got to put a couple commas there, so hold on just a second. Julie works until she's 70. She gets $2,513 a month. She stops working at 62. Her benefit is reduced to $1,282 a month. Pretty self-explanatory, right? Of course not. What are the assumptions Social Security is making to come up with these numbers? This is incredibly important to understand. So we need to dig deeper into the statement to read. We estimated your benefit amounts using your average earnings over your working lifetime. For 2019 and later, up to retirement age, we assumed you'll continue to work and make about the same as you did in 2017 or 2018. We based your benefit estimates on these facts. Your date of birth, 1958, it actually tells you the day, but we're not showing that. Your estimated taxable earnings per year after 2019, $51,750. Your Social Security, on last four shown, and we just said XXXS. Notice that the Social Security Administration is assuming Julie will work until she's 66 and 8 months, which is her full retirement age. The Social Security Administration also assumes she'll make $51,750 each year until she reaches her FRA, which is the amount she made in the previous 2 years. Please understand, and I cannot state this forcefully enough, the Social Security Administration assumes she will continue to work and make that same income into her full retirement age. And again, she made $51,750 the previous 2 years. That is what they're assuming she will make the next 10, 20, 30 years, however long it is till you hit your FRA. What if she doesn't want to work for another 6 years? How will that affect her benefit? What if she gets a promotion, is making double the money she's making now? How will that affect her benefit? There's so many variables that you cannot just look at your Social Security statement and make an assumption of your benefit until you actually crunch the numbers yourself. Bear with me just a second, my friends. I need to put that right there. There we go. Good. Thanks for hanging in there. I got to adjust this. I don't like seeing this right here, that gap. For instance, in my last job, I was making good money, more than the Social Security taxable limit, as a matter of fact. When I downloaded my statement in 2018, it projected I'd make the same earnings from 2017 until 2037, which is my full retirement age. With those assumptions, the Social Security Administration projected my own benefit to be around $2,900 in today's dollars, i.e. not adjusted for inflation. But in 2018, I became self-employed and didn't make much money. The taxes I paid into Social Security that year were minimal. In 2019, Social Security then recalculated and my benefit fell to $2,200 a month. That's a $700 a month drop-off. Well, that is a lot of money. It was not near the drastic reduction I thought it would be. And so what's happened, just remember, they're assuming I'm going to make my minimal amount of money I made in 2018 up until 2037, my full retirement age. Now, this really changed my mind as how I viewed Social Security and retirement planning. If I were to have remained in my crappy old job for 2 more decades, I would have only added an extra $700 a month to my Social Security benefit. The long hours, the commute, the corporate politics, all that for an extra $700 a month, 20 years later, nah, no thanks. Now, people tell me all the time, Josh, yeah, but if you stayed in your job, you'd be able to squirrel away more money into your retirement plan and have a higher standard of living at retirement. That's true. And false. It's true I would have been able to save more money in my 401k indeed. But my current standard of living means something too. And not having my commute, long office hours, travel, etc., my standard of living since I quit has increased exponentially. In the next chapter, we'll run some numbers for Julie so you can see exactly how all this works, and hopefully it'll give you the knowledge to run your own numbers. So stay tuned and smash! Smash! Smash Brothers. All right, thanks.